Assalamu Alaikum everyone, welcome back. If this is your first time here, then welcome. The purpose of this channel is to share my journey in buying Sharia compliant individual stocks and ETFs. I also like to bring some companies that I think are worth investing, that are definitely Sharia compliant, that I'm not actually invested in. So the whole idea is that I share my journey with you guys, show you what I'm buying and selling every single month, every single week. Okay, what you see right now is actually my own portfolio, and I'm trying to be transparent and obviously help anyone that basically is starting in the stock market, buying and selling in stock market. One of the things that I really want to make sure is that I am definitely not a financial advisor, but I'm just showing you what is actually doable, because I know, so having spoken to my friends and family, I know a lot of us are very skeptical about the stock market and whether, how to find Sharia compliant companies and so on, which is absolutely amazing, because you obviously need to be careful because there's so many companies out there that are not Sharia compliant, and obviously you work hard for your money and you don't want to invest in something that's haram. So one of the things I'm doing is I'm trying to find Sharia compliant companies, I'm investing in them, and obviously share that journey with you and to show you that I'm actually putting my own money to work, and it's not just some sort of a random channel that doesn't actually show you, but or be transparent enough with you. So having said that, let's start with what we are here for. Today we're going to look at one of the biggest companies. I do not own any shares of this company, but I'm definitely doing a bit more research in the next couple of days, and we'll see where that leads to. This company has just reported its earnings. This is probably one of the biggest companies around. They have been, is one of the oldest companies as well. So Coca-Cola is the company that we're looking at. The ticker symbol is KO. This company is currently, market cap, or has a market cap of $240 billion. They pay dividend yield about 3%. Their current PE, forward PE is 25. Now, what we're going to do now is we're going to look at their latest earnings. So they just reported the Q2 numbers, and to be honest with you, this is probably one of the best that I have seen, honestly, when it comes to, especially with the consumer staples. What I've seen is what you would expect from companies like Microsoft and Apple, the big companies, because the numbers are absolutely brilliant. Obviously, I'm sure some of you are aware of, but normally when you think about actually Coca-Cola, you actually just think about the drinks that they actually have, especially the Coca-Cola side of things. But they have about 200 brands worldwide, and I'm sure you've seen some of these. I'm sure you buy their product on a daily basis. One of the things that actually surprised me, I didn't know they bought Innocent. Innocent is actually UK based company. I remember the CEO talking to one of the channels about 7-8 years ago, but I completely forgot about it, and I just saw this morning. I was like, wow, this is absolutely amazing, the fact that they actually bought the company. I didn't know. They also own Costa as well. So if you're in the UK, I'm sure you've seen how basically Costa is now taking over from Starbucks. In every corner there's a Costa shop right now. Back in the days, it wasn't like that. So yeah, they've got so many different brands. Recently there was a company they apparently bought that was in America, Latin America, that sells alcohol. But then that was one of the reasons I didn't invest in this company. But recently I've been doing a lot more research, and it hasn't, whatever they bought, it's not actually part of their basic revenue. Is not there. I've looked for it, there's nothing there. So maybe these deals take forever. I don't know what the reason is. And whatever it is, even if they actually buy the company, there will probably be a small percentage. But again, that's a decision you need to make and think about and do your own research and so on. But honestly speaking, one of the reasons I haven't invested in this company up until now was because of that purchase, but nothing has happened so far. So I'm not sure whether the deals fell through or whatever happened, but hey, we'll look at that later on. Right, so the first thing we're going to look at is their latest earnings. The first thing we're going to look at is the statement of income. So this is their revenue. So if you look at the net operating revenue here, is this, so the net operating revenue is for the basic, this is for 3 months. So I'm going to show you 3 months first, and then I'm going to show you the 6 months that they've reported. So the first one is the 3 months, and you can see July the 2nd, basically they've reported basically just 3 days ago, the net operating revenue of $10 billion just for the last 3 months. That's up 42%. This is the reason I said this is more like tech companies. Okay, you don't see the consumer staples or consumer discretionary actually reporting these sort of numbers. The cost of goods sold, so based on this is their revenue, and they spend about that much, and gross profit of $6.3 billion. So they spend about 3.7 to make $10 billion. That's absolutely amazing. Honestly speaking, that's up 53%. Now, they've got other incomes here, but the one I'm interested in is the net income. So the net income after taxes and all that stuff is $2.6 billion. And that is up staggering 48%. That's absolutely amazing. Genuinely, seriously, if you look at any balance sheet, so go and find a balance sheet for any of these companies, consumer staples, you will not see something like this. Especially coming from a company like a KO, because they have, they can't grow the business any further. They've been around for a long time. The only thing they do is buy other companies to kind of grow their business, but they can't actually innovate anymore. So I was very, very surprised. The next thing we're going to look at is the basically 6 months. So in the last 6 months, the net operating revenue was $19 billion, and that's about 22% up, which is great. Then their gross profit, so they spend about $7 billion. Then obviously their gross profit is about $11.8 billion. Now they made some, basically obviously paid for some things in here. But then when we look at the next section, which is the balance sheet itself, okay, so this is where obviously you will know if the company is actually all right, if they're surviving, if they're in debt, and if they will be able to pay off their debt in the next whatever months to come. So total current assets, this is the one I look at normally, that's $22 billion, $22.4 billion. And then you look at their total current liabilities of only $15 billion. So they have enough assets to pay off short, basically. This is basically money they have to pay back within the next 12 months or so. And they have enough money, enough assets to pay that off, which is absolutely brilliant to see. And the final thing we're going to look at in terms of the balance sheet itself is the cash flow here. So as you can see, the operating activities, they've basically spent quite a bit of money in different things like paying dividends, paying back debt, and so on. The one thing I'm interested here is the cash and cash equivalents at the end of period, which is basically $9 billion. Now, so this, to be honest with you, is absolutely brilliant, because they have enough cash to pay off their basically debt in basic dividend. They have enough basically assets to pay off in the next 12 months. They have amazing numbers. So they were even though the operating, if I show you very quickly, I think was about 7%. I think the net, yeah, there you go. So the net income, okay, for the 6 months was $4.8 billion, and that was only up about 7%, which is absolutely fine. But if you look at what they've done in the last 3 months, okay, and if they continue doing this, and one of the reasons I actually think they will be able to do this is the fact that now a lot of countries, especially in Europe, are still reopening. So they're still starting to open their restaurants and so on, and that will benefit Coca-Cola and in the long run, because the more restaurants are open, the more people are buying their products, obviously the more revenue they will generate. Okay, and now the US is slightly different at the moment, but I think that is that's definitely going to help this company. So I think generally they will be able to sustain this. Now, one of the other things that I want to show you quickly is what happened in 2020. So 2020, basically the stock, when the coronavirus happened, it dropped about 36%. Since then, it actually hasn't gone back to where it was. That it was around $60 per share. Right now, it's trading about 56 and a half. So it's still got a long way to go. If it carries on this type of numbers, I think this company could potentially hit 70 to 80 basically dollars per share. So I think it's undervalued at the moment. If it carries on that sort of revenue, and this is the bet that you always have to take. You have to look at the numbers and what you see, and then kind of forecast what the company will generate in the next year or 2 or 3, whatever. And while you're doing that, while you're basically waiting for the share prices to appreciate, you still gain about 3% dividend, which is absolutely brilliant. So if I show you their dividends, I think it's about $1 something per share they will give you for each one of the shares that you own. So if we go down here, there we go, $1.68 per share. Okay, quarterly you'll get about, every share you own, you get about 42 cents, which is absolutely fine. And they have been paying their dividend over 58 years. They are dividend kings. They haven't stopped paying, growing their dividend for 58 years. Their payout slightly higher than I expected. Okay, you normally want a 60 or 61 or below, but that's absolutely fine. Now, the other thing I want to show you very quickly is the Morningstar. So according to Morningstar, it's 3 stars, which is fair valued. So their fair value is, they're saying, is $55 per share. It's currently 56. So you can see it's fair valued at the moment. And if you believe the stock's going higher, then it's perfect, maybe time to buy. But like I've always said in this channel, you really need to have a margin of safety. So even though they're saying it's 55, I put it down to 50. So if it drops maybe to 50, 51, then I wouldn't mind buying shares of this company. If you look at then the simply Wall Street, they are saying is undervalued at the moment, and the fair value should be about 73. Now, maybe they are taking into consideration the latest earnings. They've seen what the company has reported. They kind of forecast basically the EPS and all that stuff will be going up. So the earnings per share will be going up. Their revenue will be going up because of that. And obviously you're getting 3% dividend. Okay, so they've probably taken all that things into consideration, and they've given a fair value of 73. Now, personally, I normally look at both of them, and I will go kind of in between. So I probably would say I would buy about 50, 51, 52 maybe, and then hold on to it. Just if it appreciates, if I see it going up, maybe just buy a little bit more, collect your dividend. And again, this is the kind of company that you want in your portfolio because they're very stable. They don't fluctuate as much. So if I show you again the here, okay, they don't actually, it kind of stays stagnant. It doesn't actually move up and down like the other companies. So they're not as volatile as other companies. That's what I'm trying to say. So you will be collecting that dividend, but price is probably going up in the next few weeks. I don't know what's going to happen, only Allah knows, but obviously we'll see what happens with that. Now, if you look at Yahoo Finance, again, they're saying the same thing. So it's a buy at the moment. They are saying it's 59, okay, $60 of the average, and currently is obviously $56 and $50 per share. Final thing I want to show you about this company is according to Simply Save Dividend, which is a website that gives you how safe the dividend is for every paying company. They say is about 80%. 61 and above, they say, is very good. So this one is safe. Okay, so you don't have to worry about it. They've got plenty of cash. And the other thing, actually, very quickly, I'm going to show you, okay, is if you go to Yahoo Finance, click financials, scroll down, click cash flow there, scroll all the way down, what you will see is $98 billion, 9.8 billion, so about $10 basically billion of cash, free cash flow. What that means, they can basically buy new companies, they can reinvest in the company, obviously, and obviously pay you dividend and do pay off debt, whatever else they want to do with that money. So again, Coke is something I think is really interesting company. It's what they've reported this year is absolutely brilliant. I like the margins. I like the company. I like what it stands for. My only hesitation was the fact that they purchased a company that sells alcohol. But I've done a bit of research today, and I couldn't find anything that mentions in their basically filings that says anything about the other company. So I don't know if the deal has gone off completely, or if it's still in the pipeline, and what percentage of that will be obviously reported, or 1%, what that will contribute in terms of the overall revenue that the company will make every year. So again, that's a decision that you have to make. Currently, according to Zoya, the company is Sharia compliant. They have a very low debt. They don't have, they don't sell any products that are basically Sharia compliant. So as far as I know, it is, but obviously you will have to do your research. I hope you enjoyed the video. I'm going to do another video then basically today or tomorrow, which is actually very good whether you are starting your journey right now or you've already started. I think that will benefit you guys a lot. It's going to be a longer video, so inshallah I'm going to put a lot of time and effort to put that together. If you liked this video or any of the things that I've done so far, please just give this a like, subscribe. Let me know if you have any questions. Assalamu Alaikum.